Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that just Giga Chad pump on the Bitcoin chart after that megalithic dump that we had just the other day. Guys, of course, we are just still in that wedge that we've been talking about, and I'll show you in detail how it's so simple to think about and why we had the key levels and where do we go from now, right? But as you can see, there is green across the board, and all these cryptos are just threatening to retrace everything that they lost. But we'll see how this plays out. Sometimes it's just a mean reversion, and sometimes it's the real deal. Guys, let's jump over to my favorite play on Bitcoin. Of course, guys, this is what I'm extremely good at. Okay, this is where my skill set is best placed, is in these mean reversions. And so here I tell you guys in the Discords, if you guys aren't signed up to the Discord, please take a look at the link in the description of the video below that, there was this risky mean reversion play. If you're interested in a possible mean reversion, there might be one here on the smaller time frames. Here I'm showing you the 1 hour to reclaim some of the liquidity that was lost in our massive drop. Now, normally we're going to recover some of that, okay, but there's usually a second drive down. That's what I was saying in the last video, that most likely there was going to be a second drive down, and absolutely we got that second drive down, guys. That was not the time to long just right after we dropped. You had to wait for some type of a bottom structure to be put in. So I reminded people here we could get a pullback on the 1 hour. I have it circled down here, and to the 1 hour volatility pivot easily. And market makers are doing that basically to take out some stop losses before they would launch us up. So just to make sure we don't get embedded underneath that key level. That's what I was telling people to watch out for. And because some people get confused and they get angry, I put little smiley faces to make it super clear, even for the degenerate apes out there who don't know how to read. At least they understand frowny faces. Guys, we just don't want to be embedded underneath the volatility pivot, underneath the momentum pool. That would cause us to further dump. But as long as we were holding the volatility pivot, and if we were above the momentum pool, then that's the go signal. Okay, so I basically outlined the play for you. And here I also, showed some proof of work, right? Okay, because you have to trust me on these levels. Those are the calculations that I bring you. But just in terms of the EMAs, you can see how we were getting into a squeeze on the 9 and the 4. And so that was additional validation. Now, guys, often these squeezes fail. Okay, some of these are some of the least reliable squeezes. The 9 and the 21 is a much more reliable squeeze than the 9 and the 4, which does have a high failure rate, which is why I was looking to get into this trade at the volatility pivot, not on the squeeze itself. And so basically you guys had to understand this was a front run on the market move, and color coded, so there's no confusion. And let's just see, how did that turn out? Well, look, guys, not bad, not bad at all. You do see that we had that squeeze that was right here. And just as I mentioned, they have a high likelihood to fail, and we were likely to pull back to the volatility pivot, which is exactly what we did. And so we're just in this kind of neutral area. And what happened once we got above my momentum pool right here, above the volatility pivot, above the momentum pool? Boom, guys, just boom, okay? Like we went not only for the mean reversion over here, but we broke through the neutral point of control. We put bulls in control on the 1 hour chart, and this thing just skyrocketed. If you were in some altcoins because you were taking this play, but you were in an altcoin at the time, then you may have gotten like 15, 20, 25% on your coin. And if it was just Bitcoin or something, then you at least got like 5, 10%, something like that. Guys, just wanted to show you that the proof is in the pudding in this strategy, okay? And for those of you who put complaints into my inbox, or you unsubscribe because you're unhappy about how you can't read the levels, I just want to remind you, it's a process to learn how to trade, okay? You can't just read it, through the first time. You got to practice it. You got to understand the nuances of these concepts. It's not just as easy as up or down. You have to have conditions. You have to validate the conditions, and then you have to get a confirmation that everything is in order. That's the only way that you can take a play. And here we had the conditions of a squeeze and a possible mean reversion. And then I had some validation levels where if we didn't put candle closures underneath there, and we held the momentum pool, we held the volatility pivot. If our candles were just validating that level as a bottom there, then we could see the confirmation in breaking above the momentum pool, and lo and behold, we got that just mega trade to the upside, which totally engulfed this breakdown right over here. So that's your conditions, your validations, and your confirmation on your play, which allows you to be a successful trader. Now, if you just wanted to do up only and you just longed right there because you had no patience, you have no nuance, then you were going to get liquidated. And that's exactly what this pullback was designed to do. The second half of this bottom here, that double bottom, it's designed to liquidate the guys who have no patience up here. Okay, so just pay attention to these things. It's not easy to figure out, and even the best traders are not 100% accuracy. If you have a 60% hit rate, you're doing pretty good. Okay, obviously you don't want to be less than 50% in using your money. You want to be over 60% success rate, and then on average you're winning. Okay, now if you're winning a lot on average and you're winning more than you're losing, and if you have tight stop losses or you're controlling your risk management, then you're going to do just fine, guys. Okay, but just don't put in big money until you're winning consistently. Over 50% of the time, and when you're managing your risk well. Okay, you don't want to be losing more than you're winning, even if you're winning more often, right? That would be nonsense. Guys, let's go ahead and take a look at the last episode just to see what I was saying about this wedge and why people shouldn't just freak out just if we drop to this level. Sometimes these wedges have, 1, 2, 3 touches and then they break out. Sometimes with a scary flash wick, and sometimes they have 5 touches. 1, 2, 3, 4, 5, and then some type of action to break out. And I would say this is probably the most common one, and this also helps build macro structure for rounding the bottom. So it just means that it's going to take longer, and I mentioned this in a couple episodes as well. It just means it's going. Okay, guys, so I'm not sure if you were able to hear that on the volume. May have to turn up the volume for that part. But let's just jump over to the chart and see how it's going. And you can see, of course, that we did get that 1, 2, 3, fourth touch. And now we've just pumped back up, looking for that fifth potential touch that will validate this falling wedge that could perhaps put in that bullish structure. And I will note, we are at $27,070, which is where my volatility pivot was, which is what you were supposed to get out of, back here. If we were to fall below it, we're now back above it. So a couple episodes ago, I was warning you, if we drop below that volatility pivot, that's where things could get crazy to the downside. And, underneath 27,000, I just don't trust this chart because it could drop to the downside, right? To the upside, I wouldn't trust it. But now that we've tagged the bottom of this wedge, and we've also had that mean reversion play, which I did call this entire move, then guys, I think we're just back to where we started. It's like literally nothing happened. Okay, now we may have to flip this area and put in a little bit of structure here. You can see we have some liquidity down here. We might retrace that, and then there may be a little bit extra work that we have to put in. Remember, nothing's so easy as just going straight up or straight down. Okay, it's just never that easy. So the end of the story isn't put in yet. To that end, to that end, let's go ahead and just view the updated 6 hour that I have for you guys. And that should be right here. There we go. Let's see, we're on the 6 hour. Let me go ahead and turn off that wedge. Get rid of that path. And the cool thing about this drop is that we actually reset our volatility pivot for the 6 hour. So we were pivoting all the way down here. Now, guys, I was telling you that for the 6 hour volatility in the last episode, I was telling you that it's not likely that we were just going to have one drive down. We were likely going to have a second drive and maybe even a couple more drives. So it was likely to be sideways or down. And you can see that although we hit essentially 25,460 over here, we ended up making a new low at 25,400, just after that. So we put it in a second drive down, and then we got a little bit of a bounce off of that. That was the fake out. And then they liquidated everybody who put in a stop loss, okay? And so that was this next drive down. So we actually had three drives down after this first initial mega drive, and then of course our volatility ended up flipping just like I was talking about in the last episode. You can go ahead and check that out. I do recommend you watching the entire last episode. You can see we came all the way down to 25,350. What was the number that I was calling for? 25,300. Okay, $50 difference. Pardon me, pretty good. Okay, so 1, 2, 3 drives down, and then boom, we ended up getting a volatility flip. And I called that mean reversion to the upside in the Discord, which, if any of you took it, congratulations, Alpha Fam. You guys are absolutely killing it. We did end up flipping the middle of this candle, and we just continued to push up because, of course, we were bullishly bouncing off the bottom of that wedge, and that is what I was talking about could very well happen. Now, what we can see here is that we could have a pullback all the way back down to this general continuation. I am going to put on my EMAs, just our little helpful EMAs here. And you can see, yeah, sure, like we could come all the way back down here to 26,300, okay? And really, we're not going to be distorting this chart in any way. It's just going to be a pullback, and I could say, yeah, maybe we're going to continue on our way. However, just to flip this little shelf over here and to hold on to these lows over here, it would be much better, especially in terms of keeping bulls having the bias, if we held 26,750. So I'm much more secure if we're holding above 26,750 rather than if we're, back in the momentum pool and potentially going to lose everything that we just, gained. We dropped here and then we pumped up. Hate to do it again, okay? But yeah, above 26,750 and on the 6 hour charts, if you're trading 6 hours, then, it looks pretty good. And yesterday, this seemed like nonsense that we would just come back up. So yesterday, I was having a difficult time reading the 6 hour chart, the new one, but now I can see why. We just did a boomerang. Okay, it's very unusual to do that, but lately Bitcoin's been doing it a lot. So again, just pump and dump, dump and pump, right? It's just market makers are trying to shake everyone out on this one. Guys, the good news is that we have the volatility pivot down here. We have the top of the momentum pool at 26,673. So again, above this area, my bias is just to the upside. Bullish control zone is at 27,668. We flip that area. Bulls are going to be in control. And again, what does that align with? Well, if we go over here and just take a look at that wedge, that's going to be, in that area at the top of our, of our falling wedge here. That suggests that we would be able to flip this top should we, grind sideways and then flip it over here, above this diagonal. We'll probably have a little bit of work to do before then, but just keep in mind, we're still looking to get that kind of, generally speaking, $28,000 level. Okay, let's go ahead and put on the new daily because these levels are also significant. And it takes a while for volatility to be readable after you have a huge move, okay? And so we do see that on the daily basis, and this is much more significant. On the daily basis, we see 26,662 as the daily volatility pivot. So again, it's validating my reluctance to see us drop, too far down. I don't want to see us go below 26,662. If we're able to hold above that, we're going to be above the daily momentum pool. We're going to be above the daily volatility pivot. And that is going to give us our best chance to recover the neutral point of control on the daily, which is 27,206. That's going to give us that bias to the upside on the RSI, where bulls are going to be taking over from the bears. Now, it is the neutral area, so it's not like a stronghold or anything. They don't get the bullish, hold until 29,382, but above the neutral point of control, pretty good. Now, one thing that you'll find very interesting is that while bulls defended the bottom of this wedge, bears defended the neutral point of control. So bears haven't actually given up control on the day yet. Underneath the neutral point of control, the bears are technically, they have an advantage. Now, on a volatility basis, just random volatility, not on some technical basis, but on random volatility, bulls have the advantage in their bias above 26,662, but bears on the RSI have advantage below 27,206. So what does that mean? This is a little bit more of an extension of no man's land. Now, usually the alpha momentum pool is the no man's land, but when we see this type of kind of contrary logic between the volatility pivot and the neutral point of control, then we can also just understand that this is an uneasy area also. And so, yeah, we don't want to be losing half of this area. And so, really more comfortable, again, above 26,900-ish, 26,850-ish maybe. And, bottom line, 26,662. I definitely don't want to go underneath that. We hold this area and we just kind of grind it out. And then we're just going to be having the bears and the bulls battle each other until we flip this area, and then we can see that we're bullish again. Or if we get knocked down back into the alpha momentum pool, then we're going to see, okay, we're bearish again. Okay. So the chart's going to do whatever it wants to do, but the cool thing was that we were able to identify the bottom of the wedge for a potential bounce. We were able to get that 1 hour volatility play in the Discord. And of course, we weren't panicking when everyone else was panicking. We still identify this as a bullish structure. And again, we're on the bullish side of the wedge now again. Okay. So cool. Yeah, guys, I think other than that, let's just go ahead and take a look at the technical setup that we had on the 1 hour for that mean reversion. Now, this is the old from last night when I published it, setup on the 1 hour. And what we're going to do is we're just going to go over to the 1 hour over here, and I'll show you what I was looking at, okay? So let's see, what's the replay tool? We would have been somewhere here, okay? We would have been right here. Yeah, something like that. And we were getting this little bit of a squeeze on the 9 and the 4. And I'm just on the 1 hour, guys, okay? Just on the 1 hour. And you can see that the first thing that I noticed is, okay, we dropped pretty heavily. We had a first drive down on the 6 hour. We put in kind of a little bit of a second drive down on the 6 hour. Normally after 2 drives and you start to see it soften, you can suspect that there might be a chance for mean reversion play. You start seeing the 4 and the 9 getting into a proper squeeze, and then you can say, okay, maybe it's time for me to mark out some levels. Maybe it's time for me to consider that this thing may want to chase some liquidity that was lost, as it was dropping. Some of these fair value gaps, basically, is what it is. And so what you can see is that this is not a very reliable squeeze. Okay, this isn't a very trustworthy one at all. Between the 21 and the 9, that's pretty reliable. Between the 9 and the 4, very high failure rate. And oftentimes volatility doesn't flip that easily. Often you need to see some type of a structure. I wasn't seeing anything very reliable here. And so I did want to see a pullback to our volatility pivot. So I marked out the volatility pivot. I marked out where our general continuation was. And essentially this was going to be, we're not going to take the trade. We're going in fact, this is like a shorting opportunity. If we put, a couple closed candles down here. Remember, they should be closed candles. They should be real candles, by themselves. I'm not talking about wicks. Okay, wicks. I don't care about wicks. And so you can see that if we put any like serious closures down here, then all bets are off. Maybe this thing's going to have a continuation to the downside. But currently we were above the momentum pool and we were above the volatility pivot, which suggested that this thing was recovering its momentum. Okay, it lost a ton of momentum to the downside, and now it was recovering some momentum to the upside. It wouldn't be above the momentum pool, if that wasn't the case. It wouldn't be above the volatility pool if it didn't have some bias to the upside. So we're just going to watch it. Does this level hold? It's just at this level. Does this hold level hold? Or does it drop back into the pool? If it drops back into the pool, you don't take the play yet, okay? Unless you get like some type of real structure above here, you don't take the play yet. This is just too early after a huge drive to the downside. You don't know if there's going to be another drive down, right? You just want to, play it conservative. You want to make sure that your real, like secure levels, the ones that you really need to hold, are going to hold. You don't have to take every play, okay? And if you're just playing by EMAs, you're probably going to take this squeeze, but you're going to get shaken out by what happens next. That's why there's some advantage to having these levels as well, because you don't get shaken out unless you know those key levels. Okay, so let's go ahead and just press play, see what happens. Let's go to 50%. You can see, okay, we put a candle above it right there, but it was a bearish one. And then it wasn't a bullish one. And then you can see, oh yeah, it came back into the pool. We're not taking that play. You can see that the Bollinger Band midline came down here. We got rejected off of it. Okay, now stop. Now you can see that was very scary. Okay, on this one, we wouldn't have been taking the play yet, but look, no candle closed there. Okay, no candle closed underneath the momentum pool, no candle closed underneath the volatility pivot. We're literally just sitting on the bottom of the pool. Okay, and so what do we do next? We explore the top of the pool. And now you can say, aha, yeah, that was the fake out. That was the liquidation of people's stop losses over here. Because look, we're actually back in the momentum pool. We're back above the volatility pivot. And so now I'm saying, okay, we officially like put in a little bottom here. We put in a higher low. We got a squeeze going. We liquidated the stop losses. Okay, so now smart money is ready to go. They're either going to drop it lower or they're going to be ready to go. Okay, now we're going to say, are we going to get back into a squeeze formation? And are we going to get above the momentum pool again? Or are we just going to come back here and dump? If we get up here, this is the play to take. And so look what happens next. Boom. Okay, we got a huge candle, and why do we get that kind of candle? Well, look what happened when we were resetting Alpha Fam. Okay, it's important. It's important to understand what was happening while we were resetting down here. We had the 21 and we had the 9 grab the price action right at the top of the momentum pool and above the volatility pivot. That meant that any volatility was likely to squeeze us up. Where's the next level? The neutral point of control. So that's why we could take this play here. Now, again, that was a nice 5 to 10% on some altcoins. I always use Bitcoin's chart, but I trade altcoins myself. And so that was a nice 5 to 10% move on altcoins. And should we flip this neutral point of control, then we can take the continuation to the upside up here. Not sure why these ones are labeled like that. It looks like the bearish control zone got moved on this one. Sorry. TradingView sometimes moves my levels. You can see it's not flush over here. But anyway, guys, if we take a look at the drawing that we had set out here, yeah, you can see the bearish control zone was 25,890. So let's go ahead and put this back to where it was supposed to be. Somewhere right about there. Yeah, just randomly TradingView does that. You can see what happened. This candle took us above the bearish control zone, pushed to the neutral point of control. And so if it comes back and it holds the bearish control zone, then we're going to say, aha, bears are no longer in control, guys. Bears are no longer in control. Let's get rid of some of those brushes. And so what we're going to be looking for is either flipping the neutral point of control or at least holding above the bearish control zone. Let's see what happened. Okay, you see where we dropped back down to? Did you see that wick right down to the bearish control zone? Now you know why I had to move that back, right? And it held. It held. So this was your second chance. This was your second chance to get in, right? Because you saw that bearish control zone got broken. Bulls were pushing to the neutral point of control. The bears retested their control. They failed, okay? So now let's watch what happens from there. Boom, they try to break through again. Boom, they try to break through the bullish control zone. Bulls are in charge. Boom, they get all the way up to 27,200. And, here we are once again. So guys, that's what's going on there. And you can see the story of the mean reversion. Now, a real mean reversion probably would have, stopped in the middle here and then potentially continued on its way. That's why it's just a reversion. But this may actually be a reversal. So we're going to have to watch to see if this turns into a reversal. If the bullish control zone gets held and we just continue to go for it, this could be just a complete negation of what happened over here. You average these candles with these candles and it's higher than here, but we're still not up here. We're not in the clear. We're not higher than this price action. We're just at the bottom of that price action. And so we really have to get into this zone. So that's why we're really looking for a 27,300-ish, right? Sorry for being so sloppy there. Guys, I hope this helps you understand what's going on in the charts. I hope this helps you understand how to use these levels during a mean reversion, okay? And what type of successes we can see coming out of that, as well as where to consider, not entering yet, where to consider putting your stop losses. Now, I know that some people are going to have the question, well, if I had entered here, okay, then I would have gotten my stop loss triggered, right? Well, yeah, but the whole point of trading momentum is you don't buy into weakness, okay? We're not buying this candle, okay? We're buying into strength. So either we want the price action sitting up here, putting a couple bullish closures up here, maybe even testing the level right above it, and then holding this level, or we want to see it coming from lower up. And so that's where it was when we got, above the volatility pivot. That was your entry, and then you put your stop loss underneath the momentum pool. Okay, and you can put it really tight under the momentum pool because we already broke down and then we broke back up into it. That shows strength. It's unlikely we're going to come back down. We already tested this area previously. So yeah, you can put a really far away stop loss if you want. That's super risky in my opinion. I would like to buy into strength on the re-entry and then put it really tight here. Or I would buy into when we get above the momentum pool, and then I would put it down here or underneath the volatility pivot. Because having already retested the volatility pivot, it was unlikely that we were going to come back to it in the next move. All right. Especially if you can see the Bollinger Band midline here, this green line, especially if you can see that we ended up getting scooped up right there, basically this candle broke above it. This candle broke down from it. Okay, so you don't want to buy into that. You want to buy breaking up into the momentum pool. You want to buy breaking above the momentum pool and getting supported by the Bollinger Band. You want to buy being above the volatility pivot. You don't want to just buy at the edge of the momentum pool. You want to buy above the volatility pivot. And then you can put your stop loss down here underneath the volatility pivot, underneath the momentum pool. And you can get it pretty tight. That's how you minimize your risk. Then you can take this entire play, and it's really unlikely to come back. And it didn't come back, okay? But in the first drive down, just remember there's usually some type of a fake out. There's usually a second drive. Okay, there just usually is. It's just how the system works, okay? Like they like to liquidate this, people putting their stop losses over here. They like to liquidate them before they go. All right, I think I'm going to leave it there. You guys have the key levels. You guys understand what's going on in the charts. We're literally no difference in price than where we were a couple days ago. And so all the same principles apply. One thing that I can say is that there is some things going on with the Federal Reserve and the banking system in terms of liquidity. Yes, you've probably heard that there's probably going to be about $1 trillion of liquidity taken out of the market. Essentially, this is because the Treasury Department needs to refuel their ammo, okay? Because the government's bankrupt, and so they're doing all these shenanigans. It's just the way that they usually operate, to be honest. It's just that they're reloading right now, and so they're giving a lot of sweetheart deals on some of these, government instruments, and people are going to want to buy that instead of just buying risky stocks or risky cryptos right now. Okay, so for a little while, it could be difficult. We could get sent back down because as this $1 trillion of liquidity exits the market, it could punish some of these more risk-on assets. But I'm not 100% convinced that it's the same customer. Okay, the customer that goes for crypto, I'm not 100% convinced that they are the same customer that goes for these super safe government instruments. Now, money just goes for money primarily. So if it's just about chasing a percent, yeah, there is going to be a loss to that. And so there is going to be weakness in the charts. You can see already just on the first day of it, okay, of that liquidity drain, you can see on the first day it was already super weak. But that also corresponded with the Binance news, right? That the SEC was going after Binance. And so, does that weakness narrative continue, and do we continue to break down, or are we able to flip this kind of $27,300, $27,500 level, and start building our structure back up again? Again, if we go over to the day, then you can see 27,200 is where we're above the neutral point of control, and so far we haven't done it yet. Okay. And bulls don't really get into in charge on the daily unless we're above 29,382. So, again, like we need to get above this. We need to get above this eventually. But, as long as we're in this area, it's a lot better than being down here and pushing down there. Okay. We want to hold above 26,662. We want to flip 27,206. And to be honest, none of us are really going to sleep easy until we're above 29,382 at the time being. And this number is coming down because that wedge is falling. Okay, it's a falling wedge, right? So on the 6 hour, that's 27,668 is going to be the first instance of it. Of course, that could reject there. It could flip and then it could come back down. And so the really secure one is taking this area out over here at 29,382, flipping this area, putting in a little bit of a higher high over here, or at least an equal high, Well, you probably don't want a double top, but, at least getting into this area, and then we can attack from there. All right, that's your alpha for the day. Stay safe and happy trading.